Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Throughout last week, the Australian dollar took the challenge towards that key level of 69.95 and after 3 attempts eventually gave up the gains and turned around and now looks potentially back towards the region of 68.80 or even lower down towards the base, what I feel will likely to hold if challenged at 68.35. The reason behind that is there is the 60-day moving average, which no doubt will encourage renewed demand and also maybe draw back some of the bullish activity around this region, and therefore likely to lock in the range for most of this week of 68 to 70 cents. The euro was a little bit to the weaker side on Friday and easing lower towards the region of the target seen at 106.20. With the support level seen minor at 106.70, we may see this level crumble and therefore initiate a further slide towards the bottom side of this range. I do anticipate renewed demand returning from this level of 106.20, and if so, would see a bounce back towards the 107 to 108 region. Looking ahead to this week, much direction will be taken from the US Consumer Price Index report, or the US inflation figures, with a projected forecast headline for the CPI to come in around 6.2% year on year from 6.5%, with the core food and energy reading expected to come in around 5.4%. A higher than expected outcome could easily continue adding momentum to the US dollar index. Let's see if the market can actually retain momentum for the dollar. That would put further pressure on the downside, as I expect, due to the weak technicals. So all eyes on 106.20. Looking at dollar yen, the market's traded sideways and relatively flat for 3 days. However, the technicals are still holding somewhat bullish as it maintains over the midway point, and therefore I'm not going to abandon the level of the region seen at 132.80.90, which was briefly contested last week before dropping. But I feel the bullish technicals could actually easily see this level challenged or even taken out, and if so, will put a trajectory towards 134 to 136. Having taken the topside challenge for the sterling at 121.45, the market is weaker into the start of this week, and I feel that we are looking down towards the region of 120.2025, and with the base holding at 119.55. Any upside attempts likely to fail due to the 3 days that was relatively firm, was given away back on Friday, and now rejecting the midway point does put further or initial risk to the downside. Looking at gold, well, since the 2 heavy days, the market has challenged this level at 1,860, and after 4.5 or 5 consecutive days, the market has not been able to close under there. If we do see, though, and it is a little bit concerning that if we see a break of 1,860, would give 1,820 as a potential target. One takeaway, though, is there was a little bit of divergence here when it comes to the daily technicals with the RSI, and if this is bullish divergence that may strengthen, then we could see an impulse back towards that key topside level somewhere around 1,881, and then maybe see another downside slide. However, we can see there was an engulfing candle posted on Thursday, and if we do see a close, as I mentioned, under 60, would negate the bullish divergence and instead give a target of 1,820 to 26. And finishing up with oil, well, the market was relatively firmer on Friday after taking out the level around 78.60 and on now towards the region seen at $80 a barrel. I feel there is further scope to the upside, but likely to struggle as we get closer towards $82. And like previously seen here, all the way back, that goes towards early November last year, there was good supply, and no doubt we may see that again. And therefore a rejection and look back towards 78.5, or maybe just a little bit lower, probably down towards the region of 77.80, more to the respectful support. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to the new week.